Hello, and thank you for joining us. I am Chawin Vajanopath, Senior Director of Operations at Morrison Financial. This quarter, we're pairing our written report with a short video commentary, part of a broader effort to bring more voices from our team into investor communications. My role at Morrison Financial spans lending operations, investor relations, and the technology and team that supports both. That gives me a useful vantage point on how market developments translate into the way we manage your capital day to day. And that's what I would like to walk you through today. Let's start with the market. The most significant development this quarter was the Enhanced HST Rebate program announced in Ontario March 26 provincial budget. In simple terms, for a one-year window starting April 1st, the program effectively removes the full 13% HST on qualifying new homes, with a maximum rebate of $130,000 per unit. It applies to first-time buyers, move-up buyers, and even investors, so the eligibility is broad. The province projects over $2 billion in tax relief and 8,000 additional housing starts over the life of the program. This matters because it comes against a backdrop of subdued new home sales in Ontario over the last 2 years. Elevated borrowing costs and a wide pricing gap between new builds and resale inventory have weighed on absorption. This is the most direct demand-side intervention we have seen at this scale. So what does it mean for the funds? Two things. First, the rebate is a positive demand-side signal for Ontario new construction. We expect it to support sales velocity at projects we lend against, particularly in the GTHA mid-market segment, where pricing has been the most compressed. Several of our current and prospective borrowers are already incorporating the rebate into their sales strategies. Second, and this is important, the program does not change how we underwrite loans. A prudent construction lender underwrites against the net value of a project. So that means gross sale price, less HST, less purchaser deposit used in construction, and development charges. The HST line has always been excluded from our calculations, regardless of who claims the rebate or when. The rebate makes projects easier to sell, but it does not make them easier to lend against. That's a clear distinction that matters. We are glad to see the demand side support, and we expect it to translate into stronger sales velocity at the projects we finance. But our underwriting discipline isn't going to flex around it. The performance of our portfolio has remained strong through Q1 and into the current quarter. During the first quarter, we received ongoing loan repayments from active projects, including townhome developments in Ottawa and Brantford, and also a custom home in Pickering. Since quarter end, the Brantford Townhomes project has been fully repaid, along with a land loan in Oakville and a condominium corporation loan in Hamilton. In total, repayments year-to-date represents approximately 10% of the portfolio. That's a healthy turnover rate, one that creates room for new deployment without forcing us into the market. We view the turnover as evidence that our underwriting and active loan management are working as intended. Projects are being completed, sold, or refinanced on schedule. On the origination side, we are actively building a pipeline of approximately $25 million in loan opportunities across construction, land, and condo corporation loan. We expect to fund these over the next 12 to 18 months as existing loans continue to mature and repay. We hope to update you on a few of these in the next quarterly report. One quick housekeeping item before I close. The updated offering memorandum, including the 2025 year-end financial statements, is in the final stages of review. Once finalized, it will be made available to you through the usual channels. For the full picture of the quarterly distributions, funds growth, portfolio statistics, and our featured investment spotlight, please refer to the written quarterly report which accompanies this video. If you have any questions on the portfolio, the market, or your investment, please reach out to Tarik Ansara at Belco Private Capital. His contact information is in the report and on the closing card. Thank you for your continued trust in Morrison Financial. We will see you in the next quarter.